Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Robert Half Inc. quarterly report. Robert Half Inc. offers a diverse range of businesses and services that cater to various industries. The company's main segments include Contract Talent Solutions, providing contract professionals in finance and accounting, technology, marketing, legal, administrative, and customer support fields permanent placement talent solutions. Placing full-time accounting, finance, and tax personnel Prodaviti, offering consulting services in compliance, finance, technology, operations, data, digital, legal, HR, governance, risk, and internal audit under the Prodaviti segment. Robert Half Inc. operates several brands that provide specialized services, including Accountemps Accounting and Finance, Robert Half Finance and Accounting Office Team, Administrative Support, Robert Half Technology, Robert Half Management Resources, Robert Half Legal, The Creative Group, Marketing and Creative. These businesses and services are designed to meet the needs of clients across various industries, both domestically and internationally. The stock price of Robert Half Inc. has plummeted by over 59% in the past year due to a combination of factors. The primary driver is the slowing labor market and weak hiring environment, which directly reduces demand for Robert Half's staffing services. Consistent revenue declines have also been reported, with sales falling by 7–11% year-over-year in recent quarters. Missed earnings and bleak outlooks have further contributed to the decline, as well as declining operating profit and margins. Analyst downgrades from firms like Goldman Sachs have also weighed on the stock. The broader economic uncertainty and interest rate hikes have added to the negative sentiment, making it a challenging time for staffing and consulting firms like Robert Half. The primary drivers of revenue growth or decline are largely influenced by external factors. On the decline side, economic conditions, a decrease in hours worked by engagement professionals, and lower staff utilization have contributed to a 7.6% drop in service revenues and a 10.1% decline in Contract Talent Solutions revenues. Conversely, intersegment revenues increased by 2.8%, while Contra Talent Solutions revenue grew by 5.4% in Q3 2025. The overall performance is also impacted by factors such as hiring activity, new project starts, labor supply constraints, and client caution. Net income and profit margins. A decline in performance. The financial performance of a company has experienced a significant downturn. Net income decreased from $65,451,000 in 2024 to $42,916,000 in 2025, resulting in a decline of $22,535,000 in Q3 2025 compared to the same period in 2024. The year-to-date YTD net income also saw a decrease of $96,074,000. Profit margins have also suffered, with gross margin decreasing by 11.7% from $571,656,000 in 2024 to $504,231,000 in 2025. Operating profit margin and net income margin have also declined, from 4.1% and 4.5% respectively in 2024 to 1% and 3.2% in 2025. The decrease in gross margin and operating profit margin are likely contributing factors to the decline in net income and profit margins. However, the exact reasons behind this decline remain unclear. The company is generating positive operating cash flow, as evident from the financial summary. The net cash flows provided by operating activities for both 2025, $137,432, and 2024, $255,636, are substantial, indicating a consistent trend of generating cash from core operations. This suggests that the company's business model is profitable and capable of producing positive cash flow, which is essential for its long-term sustainability. The company's financial health has undergone significant changes in recent years. A notable increase in total debt level was observed from December 31, 2024 to September 30, 2025, amounting to $83,884. This substantial rise in debt is a cause for concern. Furthermore, the interest expenses have also seen a considerable hike of 25.3% from 2024 to 2025, reaching $40,190, 10.6% of revenue. These changes indicate that the company's financial situation has become more burdensome due to increased debt and higher interest payments. The company's financial performance reveals both positive and negative trends across various segments and regions. On the bright side, Pradaviti saw a revenue increase of 2.3% for the 9 months ended September 30, 2025. Additionally, the finance and accounting segment within Contract Talent Solutions experienced a relatively minor decline of only 10.4%. Furthermore, Australia, Brazil, and Canada benefited from a strengthening US dollar against their respective currencies. However, some segments and regions struggled during this period. The administrative and customer support segment within Contract Talent Solutions saw a significant drop in revenue of 11.3%, while Permanent Placement Talent Solutions declined by 11.4%. Unfortunately, the UK and Europe also faced challenges due to a weakening US dollar against the British pound and euro. Management's outlook on company strategy: the company's management is optimistic about its business prospects, citing strong pent-up hiring demand and improving economic conditions as drivers of growth. This positive outlook suggests a focus on expansion and capitalizing on emerging opportunities. However, there are concerns regarding future cash flows due to macroeconomic factors affecting revenues and net income, which may impact the company's ability to sustain long-term growth. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In 2025, it declared a dividend per share of $0.59 and paid out a total of $180 million to stockholders for the first 9 months of the year. This is an increase from the previous year's payout of $166 million. In addition to dividend payments, the company has also been active in buying back shares. In 2025, it was authorized to buy back up to 5.6 million shares and actually repurchased 1,702,192 shares at a cost of $79.59 million and $10.9 million respectively. The total amount spent on share buybacks for the first 9 months of 2025 was $92 million. Overall, the company's commitment to returning value to its shareholders is evident through both its dividend payments and share buyback activities. That concludes the financial summary for Robert Half Inc. Feel free to comment below, and I will be happy to answer them when possible.